Tesla reported earnings today. I'll give you my thoughts. UPS and Visa also reported. I'll tell you what I think it could mean for the broader economy. Finally, I bought something today, and if you stick around, I'll tell you what it was. Welcome to the Stock Sale Flyer. My name is Aaron, and as always, none of this is financial advice, as it is just my opinion. Let's get into the Tesla earnings. So I have the quarterly update here, and they missed on earnings and revenue, but this thing is up quite a bit after hours. And so going into this, I was looking to see, is there stuff in the update that would lead to this upside, or was there just so much bearish sentiment around the stock that if it had results that weren't quite as bad as they could have possibly been, it was bound to get at least a short-term move to the upside? So I started going through, noted, so total automobile revenues down 13% year over year. Energy generation and storage revenues up 7%. And services and revenues up 25%. Now, as you can see, though, the total automobile revenues are still the vast majority of the business. So kind of a theme that we've heard is that Tesla is more than just a car company. But when you look at the revenues, you can see that the vast majority of their revenue is still being derived from automobiles. That could change in the future. To be honest, I'm not particularly bearish on Tesla or anything. I would actually like to be invested in this company, but I don't want to pay the wrong price. I was actually just getting to the point where I was going to do a valuation that was a little more in depth, and we're seeing this jump. So I'm going to be interested to see if this jump holds or if it doesn't hold. And I wouldn't be really totally surprised either way, but there are some things in these earnings that I've looked at that make me think maybe this short-term jump is not going to hold up. And I'll get into that as we go along. It starts with the revenues. So 13% total revenue down year over year is obviously not a good thing. Gross profit was down. As we go through, we see that it said their quarter end cash equivalents and investments in quarter one was $26.9 billion. And it says the sequential decrease of $2.2 billion was a result of negative free cash flow of $2.5 billion, driven by an inventory increase of $2.7 billion and AI infrastructure capex of $1 billion in Q1. So they're spending a lot of money on AI for, probably different reasons within the companies. The self-driving, there's the robot, business that they're trying to get going with Optimus. So there's those aspects that are probably related to that. But when you have this excess inventory that we're seeing, like we go down total deliveries, negative 9% year over year. Global vehicle inventory, 87% increase year over year. This is significant stuff. They have an inventory built up that, is not like what they would have in the past. And, that can, if they're expecting to move those vehicles, I guess that's a good thing. But if it's because demand is down, then, that's not a good thing. And we've seen the price cuts. So I'm questioning whether or not the demand is there. It seems like it's not. If we keep going through these, there's a note here that energy generation and storage, I said already, revenues were up 7% year over year in this part of their business. And gross profit was up 140% year over year, driven by increased Megapack deployments, partially offset by decrease in solar deployments. Energy generation and storage remains our highest margin business. So this, to me, is an area where if Tesla's going to grow, it should come from this. And there's some mention in these results that suggest that they could see some significant growth in this area. So maybe that will be the case. We'll have to see. But if that's their higher margin, the highest margin business that they have, I would say looking for growth in that area is something going forward that I'll be looking for. Volume. So in 2024, the growth rates of energy storage deployments and revenue in our energy generation and storage business should outpace the automotive business. I found that interesting as well. So they're saying that energy generation and storage business is going to basically outpace automotive in terms of growth. So how much growth? We'll see. And then I found this really interesting. So this was, it seemed like, after hours when, I was on X and looking at what people were saying about this, people were really excited about this idea that they're going to launch new models ahead of their previously communicated start of production in the second half of 2025, or they're looking to accelerate the launch of these new models, I should say. It says, we have updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start of production in the second half of 2025. And they're saying these will include more affordable models, and they'll utilize aspects of the next generation platform as well as aspects of our current platforms, and will be able to be produced on the same manufacturing lines as our current vehicle lineup. This update may result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in a more CapEx efficient manner during uncertain times. This would help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling more than 50% growth over 2023 production before investing in new manufacturing lines. My question is the demand going to be there? So you're going to produce, it seems like you're going to grow production and you're going to produce more, you're going to produce vehicles that are less expensive, right? Will people buy them? Because right now we're seeing price cuts, which suggest a lack of demand. The narrative is that people want hybrids. Again, is that the case? I'm not 100% sure, how hybrids are doing compared to EVs right now. But the demand has to be there, or the supply increase is not going to be beneficial to the company, right? So going forward for Tesla, what I'm looking at is, do we get to a point where I think the stock price matches where they're going? I'm probably going to do a more thorough valuation at some point here. And do we see growth in areas like energy generation and storage? Do we see growth in their services part of their business? And where is vehicle demand? Because I think that is a big part of this. To be honest, my initial I don't know if it was my initial perception, but as I was going through this, my perception was kind of like, this kind of seems like they're trying to sell me on a bright future, but the numbers are not there yet. So it's kind of speculative. And if it's speculative, I want to value the business based on what it's actually producing, and a reasonable story. I'm not going to go around thinking that, in 5 years, we're going to have Optimus robots and everybody's house is doing all their cleaning or something, or, nobody's going to be driving their own vehicle, or they're going to put Uber out of business or something, or I'm not going to go around reaching for a story and then putting numbers in that match that story. I have to see more evidence of it. And so that is kind of what I'm going to be looking for with Tesla going forward. So when I value this, it's going to be, more based on what they're really doing in terms of where their revenue is coming from right now. And what are things looking like realistically going forward, and I'm willing to change that story as I see more evidence, but I need the evidence with Tesla. All right. So other things, Visa reported second quarter results, and they did well by the looks of it. So net revenue up 10%, GAAP net income up 10%. They said this was driven by, it says overall payments volume grew 8% and cross-border volume grew 16%, driven by stable consumer spending. So my question with this is, are people spending money they have with their Visa cards, or are they spending money that they don't have with their Visa cards? Because those are entirely different things in terms of what this could mean for the broader economic picture. If they're spending money they have, this is great for the economy. If they're spending money they don't have, kind of the opposite, right? And so I saw some other things I thought were worth bringing up. UPS reported profit beat estimates as cost cuts offset weak delivery demand. I said in my other videos, a couple of my other videos, I think this week, I think I brought it up yesterday, if the shipping volume is down, that can sometimes be a leading indicator that there's weakness in the economy. And we're seeing that there's shipping volume down for UPS, right? Weak delivery demand. Could this be because of other factors? Maybe people are going and doing curbside pickup more than ordering online, or maybe there's other factors at play here. But weak delivery demand is not something that I would consider as a good thing economically for the economy as a whole. So again, this isn't like it's predicting the future, but these are things that we can look at and take into consideration when we think about how things are going overall. Also, there was this article from Yahoo Finance. New data released Tuesday flashed a sign that the U.S. economy could be losing steam. S&P Global's flashed U.S. Composite PMI, which captures activity in both the services and manufacturing sectors, came in at 50.9 in April, its lowest reading in 4 months. April's print was down from the 52.1 reading seen in March and below economists' expectations for 52. So, again, are these signs of economic slowdown? Are the Visa earnings because people are spending money that they don't have, or is it because they're spending money that they do have? And is there anything to the UPS numbers? So what I'm looking for as we continue to go through this week, we've got Meta tomorrow, Chipotle tomorrow. Again, looking at ad revenue and consumer discretionary spending for signs of how the economy's doing overall. Whirlpool's tomorrow. That stock is down quite a bit. So durables, we'll see how they're doing. We've got Microsoft, Alphabet, Roku. So Alphabet and Roku, you're looking at, again, ad revenues. How is that going? And Comcast on Thursday. I might try to get a valuation out on Comcast tomorrow before those earnings Thursday. We'll see. That is a stock that I am invested in. And the last time I did a valuation on that, which was not that long ago, I thought it was on sale. So maybe I'll get that valuation out to you tomorrow. We'll see if I can have time to get that out. But yeah, I'll be interested in those. So those are some of the things I'm looking at the rest of the week. I did pick up something today. I picked up ticker symbol WEAT, so wheat. And U.S. wheat farmers face bleak crop economics as grain oversupply hits. And if we look at where this is right now, we're at quite a low. So this chart on this fund goes back to before 2012, and wheat prices are quite low right now. This is not a buy and hold forever type of thing, but I think that wheat as a commodity is pretty down right now, and so I'm kind of liking this as a medium term type of play. So not financial advice, but that is a position that I took today, and I'm looking to see how that does, and I'm sure I'll be updating you on that as we go into the future. So, as always, thank you for joining me today. You can find me on X or Twitter at Stock Sale Flyer. The logo is the same in the video, so please follow me there if you haven't already. Drop a comment, drop a like, subscribe, click the bell, all those things if you found this video interesting or helpful at all. And please, engage in some of the conversations about these things. I'd love to talk to you about them. All right, thank you. Have a good evening. Bye.